Good morning, everybody. This is Patrick Montes de Oca with Trading Talk. This segment is brought to you by Equity Management Academy. We have the distinct honor and pleasure to have with us today Mr. Rick Rule, President of Sprott Asset Management USA. Mr. Rule has dedicated his entire adult life to many aspects of natural resource securities investing, in addition to the knowledge and experience gained in a long, successful, and focused career. He has a worldwide network of contacts in the natural resource and financed worlds. As chairman of Sprott Asset U.S. Holdings, Mr. Rule leads a highly skilled team of earth science and finance professionals who enjoy a worldwide reputation for resource investment management. Welcome to Trading Talk, Rick.
Pleasure to be with you, Pat.
Just to move right into the first question here, everybody has in mind is that the Fed's decision not to taper this week. What do you think is behind this surprising move not to taper, and what do you make of this moving forward from here?
Well, that's interesting, Pat. If you dial back to an interview that you and I did here in these offices, I'm going to guess it was 9 months ago, we were talking about the so-called quantitative easing. And the point I was trying to make is that it wasn't just about adding liquidity to the system. The system was full of liquidity. What I think it was about, and is about still in some measure, is the fact that the federal government is spending $1.2 trillion a year more than it takes in. It's able to borrow about half the deficit, and the other half of the deficit it has to buy from itself. It has to create the money to buy the bonds it can't sell in the market. So, of course, they can't taper. Where is the money going to come from? This seems to me to be an incredibly illusory discussion, and the only thing that really amuses me is the lack of sophistication on the part of the alleged big thinkers in major media who don't understand this for what it is, which is counterfeiting, plain and simple.
We have another issue coming up, which is the debt ceiling deadline coming up in a couple of weeks. Can you give us your insight on this very important issue?
Well, I think they'll find a way to, perpetrate what under generally acceptable accounting principles would be a fraud and find a way through it. I think the Republicans were punished for their political gamesmanship last time. And when I say political gamesmanship, I don't see an awful lot of Republicans that are interested in spending less either. They just seem to be interested in spending on different constituencies. But the spending issue seems to be less current in Washington than scoring political points against your opponents, which is what the grandstanding associated with the debt ceiling limit is. If either side or anybody was really seriously interested in the deficit, there are some concrete spending measures that they can take. It seems, however, that whenever they conspire to save money out of one column, it's already been spent in 2 or 3 other pet columns. I think that the markets will respond hysterically to the discussion about the debt ceiling. But I personally believe that the discussion would be characterized as entertainment and news.
Do you think that the U.S. credit rating will be downgraded again? And if so, how will this affect the financial markets and in particular precious metals?
Ironically, I don't think that the U.S. will be downgraded because as rapidly as our situation is deteriorating, my joke has been for years, Pat, that we run the worst currency in the world except all of the others. What we are is simply the prettiest mare in the glue factory. And I think that we will not devalue, and I think, ironically, despite our problems and despite that we're counterfeiting circa $700 billion a year, that the U.S., because of its comparative advantages over other countries and the depth and liquidity and transparency of our currency markets, will still function as the reserve currency, and the United States will still get the benefit, unbelievably, of seigniorage. It's funny, but there isn't a viable competitor, which is the only reason why we're able to get away with what we're getting away with.
You know, we had the best rally in gold and silver in the last 3 years after the Fed's decision. Was this a short covering rally, or is this the beginning of a more significant move to the upside?
Well, I'm a gold bug, Pat, so I always believe it's part of a significant move to the upside. I think there was a few things happened. I think one thing is that gold was simply oversold. We had a massive move 3 months ago from weak hands to strong, and you and I talked about that. That's a very good thing. Gold went from weak central banks, sclerotic central banks, to emerging market central banks that were under indebted. Gold went from overly leveraged futures markets, weak hands, people engaged in hedge funds, engaged in leverage carry trades, to the physicals markets, the so-called Chinese housewives, unleveraged. Right. So gold moved from weak hands to strong, which is a very, very, very good thing. And I see that continuing. I see one of the reasons for the snapback being simply the liquidation of the momentum-driven hedge funds, the carry trade that came unwound in the futures markets ran their course. So there was less available on the sell side, which meant that the market snapped back from an oversold condition. I am very permissive to the point of view that we are ready for a much more sustained gold rally.
Okay.
If you look at the actions of the guy whose name graces my door, Eric Sprott, who's been a singularly successful directional investor for the 30 years that I've known him, Eric believes that we're on the doorstep of a really major move in gold and silver equities to the upside. I'm not prepared to be as bullish as he is. I'm a credit analyst while he is a market commentator. But I certainly wouldn't discount that, and I am certainly taking advantage of these soft metals prices to add to my own and client holdings.
In front of this, we have the general sentiment that seems to think that the Fed is winning on the inflation front. And there is no reason to buy precious metals as a hedge against inflation. Can you comment on this?
Yeah, it's interesting. I made the wisecrack earlier, differentiating news and entertainment, but an awful lot of the so-called information that the public is consuming these days is truly entertainment rather than news. The idea, as an example, that you buy a packaged inflation number from the government, which has an interest in lower inflation numbers for a whole bunch of reasons, is interesting to me. I mentioned in an interview that you and I did that I had driven on the way to an interview past a Motel 6.
Exactly.
And what was interesting is that the Motel 6 sign said $69 for a room. Pat, when I was your age, it was called Motel 6 because a room there cost $6. And I guarantee you that the utility associated with a room at Motel 6 has not increased 11-fold in the last 30 years. It's that the numerator that you value the room with, the denominator that you value the room with, has depreciated. And with regards to the inflation number that's reported, the CPI number, this Consumer Price Index number, this is an insane number. I don't spend any money. I'm not really a consumer. And my cost of living increases more rapidly than the Consumer Price Index. And when they report the thing ex food and fuel, how does that make any sense? These guys don't drive and they don't eat. But the worst thing, Pat, and people buy this every damn day out of network television, is that the CPI, your cost of living, as figured by your government, doesn't include tax.
Yeah, it's amazing.
Now, if I didn't have to pay the tax, Pat, believe me, I'd complain a lot less about the index. But I do, so I do. The inflation number that's being reported to you is nonsense. There's less information in the CPI than there is in the average Marvel comic book.
Suppressed inflation is what I call.
Sure, absolutely.
Let's move away, Rick, from the U.S. markets for a moment and talk about, in particular, one of Latin America's fastest-growing economies in the world, Ecuador. According to the International Monetary Fund, the IMF, Ecuador is growing at 5.5% annually. And Natalie Selly, the Ecuadorian ambassador to the U.S., commented in a recent presentation in New York that Ecuador is ready to compete on the global stage and go back to the financial markets. As we speak, the Ecuadorian Central Bank has issued and released a silver dollar coin currently in circulation. Is this a very clear sign that strong emerging economies pegged to the U.S. dollar see the writing on the wall and are hedging their economies against the inevitable the collapse of the U.S. dollar as the world reserve currency?
I think with regards to Ecuador in particular, that this may be more domestic politics than having the foresight. I wouldn't give the political class in Ecuador enough credit to be smart enough to de-link themselves to the United States for any reason other than domestic political consumption. I would also point out that Ecuador is a classic case of a country that, to the extent that short-term interest rates in the United States continue to rise, will be a victim of an extraordinary flow of hot money from Ecuador back to the U.S. Much of the money that's gone in the secondary and tertiary markets globally in the last 2 years has gone in desperate search of yields as a consequence of the artificially low interest rates in the U.S. And if, as some commentators have suggested, the U.S., irrespective of quantitative easing, has lost control of short-term interest rates, that would be very detrimental to third world markets, including, of course, Ecuador.
I'm not sure if too many people are aware of this, but Latin American countries have established a Latin American central bank, and they have funded this with $20 billion in order to provide any financing requirement or needs for the rest of the Latin American countries. This is, in fact, a political move, obviously, but also isn't this a sign that they're moving away from the IMF in terms of the reliance for loans and this tremendous austerity programs that they implement in these developing countries that actually doesn't allow them to develop?
Well, I think it's an important first step. I very much believe in any form of multilateral cooperation that can be established. Whether or not the Latin American Development Bank or Latin American Central Bank succeeds is probably ultimately less important than the fact that the affected countries decided that they would develop their own solution. $20 billion to you and I and to your listeners is an awful lot of money. $20 billion in the context of the budget deficits, the current account deficits, and the trade deficits run by some Latin American countries is, sort of a burp in a windstorm. But the fact that they have developed or are beginning to develop at least institutions where they have some of their own money at risk and they propose to implement some of their own decisions will provide for a secondary feedback mechanism, a different sort of information, a different way of trying to address problems. When you look at the IMF and the World Bank and the money that's wasted over the last 50 years, we have an awful lot of information about things that don't work, and perhaps the Latin American countries, using their own money, can figure out something that does work. You know, Pat, that I'm not a fan of government. I'm not a fan of local government, state government, federal government, and the imposition of a fourth level of government, be it the European Economic Community or the Latin American Central Bank, seems to me to be adding another layer of idiocy on top of a great pile of communal idiocy that we've developed in the world over the last few years. That notwithstanding, at least we have competing idiots as opposed to monopoly idiots, and that's probably a good thing.
At least it's a step in the right direction.
Correct. Competition is always good, even if it's in the race to the bottom.
With the current gold and silver ratio running at around 59-1, is this signaling that silver is about to make a significant move to the upside against gold?
I'm the wrong one to comment on that. Eric Sprott has certainly made that case persuasively, but he has studied the data much more diligently than I, and so I would defer and say, having watched him for 25 or 30 years, when he speaks, people do well to listen.
Can you share with us your data points on the relentless demand that is coming from China, increasing their physical purchases tenfold so far this year, and do you think that it will continue?
I do think it will continue. Chinese people that I know, now this is anecdotal, not statistical, evidence themselves and discuss also a cultural predisposition to gold and silver. And it would appear that there is central government encouragement for the diversification of individual savings in China to include gold and silver. If you juxtapose three trends, which are rising household incomes in China, and concomitantly rising private savings in China, with the cultural predisposition to storing wealth in the form of precious metals, and official sector encouragement of the storage of wealth in precious metals and the discouragement of some other investment forms in China, I would suggest that Chinese demand will continue and perhaps accelerate. I also note with interest an article yesterday that I read in Bloomberg. It may have been published earlier, but I caught it yesterday in Bloomberg, where the largest physical bullion dealer in Thailand, a company that imported 80 tons of gold into Thailand last year, anticipates importing 140 or 150 tons of gold into Thailand.
Where is the gold coming from?
That's a hell of a question. That's a hell of a question. In particular, it's a hell of a question, given that when the Germans asked for their 1,200 tons of gold back, the U.S. said, yes, you can have it over 7 years. Maybe the Thais are better at putting gold on planes than the Germans are. It would appear, however, that the market can supply physical gold. It's this dubious central bank gold that appears to be in odd supply, which might confirm one of Eric Sprott's other suspicions. But the point I was trying to make is simply that while everybody focuses on China and India, the story is repeated. It's repeated in Vietnam, it's repeated in Thailand, it's repeated in Malaysia, it's repeated in the United Arab Emirates. I was just in Turkey last week and the week before. It's repeated in Turkey. There are retail gold stores in Istanbul. You never read about this in the Western press.
Right.
And they're doing land office business. There is incredible physical retail unleveraged demand for bullion.
Interesting. Rick, I know your expertise deals with the natural resource markets like platinum and palladium. What do you make of the prospects for demand in these products in the Australian markets in particular?
The Australian markets?
Yes.
You're talking about demand for physical platinum in Australia?
Yes, the actual demand for precious metals, in particular palladium, platinum.
I think the physical investment demand will be reasonably strong. I would expect the Australian economy overall to be weaker for the next couple of years. It's been white hot for almost 10 years. So I would expect that physical platinum and palladium demand tied to automobile sales, as an example, will be flat in Australia for the next couple of years. There are, however, very, very, very major natural gas liquefaction and petrochemical processing plants under construction in Australia that will require large amounts of platinum and palladium for their air quality and pollution abatement activities. But I would anticipate that non-investment physical demand for platinum and palladium in Australia will be flat as a consequence of the fact that I think that the Australian economy will underperform relative to historic standards.
Would that affect the gold and silver demand as well?
The gold and silver demand in Australia is largely investment demand, and I would suspect that investment demand in Australia would be relatively strong for gold, silver, platinum, and palladium. I note, however, that Australia is a fairly small market. I don't think that Australian demand is substantial enough that it will have much impact on overall precious metals prices, given the relatively small size of that market.
Anything else you would like to add regarding mining shares, which have been literally brought to the point of extinction here? Are we looking at a potentially generational opportunity here, Rick?
I think we are. I think we're looking at generational risks, too. You point out, or at least you use, I think wisely, the use of the word extinction. We have talked on your show before, Pat,
yes,
about the dysfunctional nature of the junior mining community as a whole, and the fact that 60 or 70 or maybe 80% of the companies are valueless. If money doesn't come into the sector, in the near term, it will actually be a very good thing, a Darwinian cleansing. Extremely unpleasant for people who hold shares in companies that fail, but in fact useful in the sense that you take useless corporate vehicles, useless legal expenses, useless legal fees, and useless general and administrative expenditures out of an industry that can ill afford them. The opportunity is that in the bull market, investors took up bad companies with good, and in a bear market, they take down good companies with bad. differentiating between the good and the bad companies and buying the good companies in a bad market is what is responsible for my fortune today and Eric Sprott's fortune today. I can tell you this, Pat, because I've lived through it many times. Bear markets are the author of bull markets, and bull markets are the author of bear markets. The bear market that we experienced through the mid-1990s, the whole of the 1990s really, was answered by this incredible bull market in the early part of the last decade. And past is prologue. I can't tell you when, but I know that the question begins with when. It doesn't begin with if, and that's a very good thing.
Right. How can our audience get in contact with you if they choose to do so, Rick?
The easiest way is to come to our website, which is www.sprottglobal.com. I would urge your audience to look at the top of that web page and subscribe to Sprott's Thoughts, or else go to www.sprottsthoughts.com. Sprott's Thoughts is a blog that is put out by 26 opinion leaders and myself and Eric Sprott within the Sprott community. It comes out 3 times a week, addressing a variety of subjects, including many subjects that you and I have discussed. It's absolutely free, and we hope to coming out 5 days a week when we get a little less busy around.
Once again, Rick, it's always a pleasure to talk to you, and on behalf of our audience, thank you for your wisdom and insight during this most auspicious time in the precious metals markets. Until next time, my friend, take care.
Always a pleasure. Thank you.
Take care.